What's up? Welcome back everyone to another episode on Ang's channel. Today we'll be looking at another Russell 2000 stock, which is going to be E.L.F Beauty Incorporations. Without further ado, let's get right into it. So according to E.L.F, is actually a sort of like beauty that companies that sells a lot of makeups or products that a lot of girls and women are related to, which have lipsticks, skincare, and so on and so forth. So based on these charts right now, since the year of 2016 until now, the company is actually in a very good positions whereby they just in the form of increasing. And for the last year until now, the stock market tanks, and I guess this stock market actually tanks for about 70% if I'm not mistaken. So the market actually tanks about 77% before going back to the price range of $125. So this company actually looks like a very good company to hold long term, especially when it is actually in the face of having cheaper discounts compared to at the all-time highs. And also this could be a very good opportunity. But without further ado, let's go into their financial status and understanding whether or not if this company still have its competitive advantage as well as strengths in this market. So over here we have the revenue of the E.L.F Beauty, and you can actually observe that the quarterly reports for their revenue is actually in a very decent increasing form, indicating the company is actually in the phase whereby they are increasing their sales. And as for the latest quarter, it's actually increasing very slowly, indicating there might be a very maturity happening within the company itself. As for their net income of the E.L.F Beauty, we can actually observe there is sort of like a seasonal increase or sudden pump in terms of net income, especially it's during the June of 30 as well as June of 30 for 2023 and 2024, and also for 2025. But then the pump of this net income is just does not meet or even surpass the previous similar quarter for different years. So from the perspective of net income, is actually in the form of negative, which shows the ability of the company to profits and make free cash flow from it. It's kind of difficult, and this might be one of the concerns from this company. And next is going to be their free cash flow, but we can actually observe that the free cash flow is in a very decent form of increasing and also peak during the year of 2025, which is currently at a highest value in terms of their free cash flow. So that is quite of a surprise, knowing that they're actually in term of decreasing form of net income, but they still being able to accumulate from their profits and make a lot of free cash flow from it. So let's look at what exactly E.L.F Beauty company actually provides and what do they actually do. So their core business is a affordable and ethical beauty, including their eyes, lips, and face, and founded in 2004. A wide range of products including foundation, makeups, skincare tools, priced around $6 to $9, making beauty accessible without compromising their quality. So their missions and brand is to make the best of beauty accessible to every eye, lips, and face. So here is the summary and highlights, whereby the product range is very affordable, vegan, cruelty-free makeup and skincare, inclusive, accessible beauty with ethical values. So basically their streams of income, as we mentioned, consists of wide variety range of the makeup products, including from face, lips, to eyes. So their basics is actually primary income comes from their product sales, including cosmetic and skincare, through their retails and authorized reseller. And for their secondary growth is actually the acquisitions, the Naturium Road, international expansions, as well as viral collaborations. They mentioned that the margin of their company being able to earn are actually quite strong because of the cheap products as well as kind of a premium pricing for skincare, while at the same time being able to achieve their goal of the company, which is to provide a very affordable, accessible beauty skincare product makeups with good quality as well. So moving on to the strengths and weaknesses of E.L.F is that, first of all, their strength is because of their high affordability as well as high quality of the product. Second of all is actually the vegan and cruelty-free, which would actually be more aligned with ethical as well as sustainability trends and gain popularity among the vegans within the country, especially in US, and also have digital first marketing using TikTok and viral campaigns, and they have high gross margin because of what the affordability needs to be of low cost to produce the product and selling it at a very accessible as well as high margins of around 70% for the company. And as for the weaknesses, it's actually very concentrated in North America, so it's heavily reliant on US sales and also heavily reliant on social media trends such as TikTok, Instagrams, and also limited premium presence, while affordable may not capture high-end luxury consumers where margin can be even higher because, as they mentioned, the company aims to provide accessible, affordable product while at the same time maintain the quality. Well, this is where a lot of high-end consumers are actually sort of like they have better options in for example buy other companies' products such as L'Oreal, Chanel, or even expensive product which they actually used to as well as prefer. So as we mentioned that they provide a more affordable and accessible makeups and skincare products. So is E.L.F actually one of the biggest in its fields? And if there is any better company, it will be L'Oreal France, which is the largest beauty company in the world. They also have Estée Lauder with premium and luxury powerhouse, as well as Procter and Gamble Beauty, which is also one of my holdings for now, and it's part of a consumer giant, P&G, and has different brands such as SK-II, Olay, Head and Shoulders, which by they provide revenue and generates revenue over 15 to 20 billion dollars, as well as other products. So the summary is that the E.L.F is actually not the biggest in this kind of a field, and companies like L'Oreal Estée Lauder is far more larger and diversified, and this company is just one of the small company compared to giants where its growth rate in cultural relevance makes it punch above its weight. So let's go back to the ratios for this company. So for E.L.F Beauty, we have a debt to equity ratios at a value of 0.39. It's actually below 1, especially below 0.5, indicating there is low debts. As for the ROE, is a very significant level of 13%. However, it's actually been decreased already, and highest is actually in a 24%. And before the year of 2024, the company is actually a very attractive because of higher than 15% and increasing, but right now the ROE is just in the form of decreasing, and especially now is lower than 15%. And for the ROIC, it's also in the same similar form for ROE, and it's just that the value now is less attractive compared to previously increasing and higher value. And lastly is going to be our balance to look at the net cash. So over here we can observe the net cash, which means that the company has more debts compared to cash, which can be also quite worrying. However, consider that the value of the debt to equity ratio is at 0.39, so it's kind of like acceptable for this company with actually equivalent or enough cash in order to deal with criteria situations of paying off their debts. So the company is actually still in a safer zone. So lastly, we're going to look at the economic mode score for E.L.F Beauty Incorporations. So for here, we have the branding loyalty pricings at 7, barriers to entry at 6, high switching costs at 6, because this is actually, while consumer loves the brand beauty, shoppers easily try new brands unless it's embedded, because it's especially very close towards achieving their goal of affordable and accessible beauty. So as the situation of the consumers increase, their status increase, they will likely switch to more premium products, especially the product of they're using is actually not that expensive, so it's easily to switch from one another. And the network effect is at 6, economic scales at 7 because of less growing revenue compared to all the giants such as the P&G, L'Oreal, as well as Estée Lauder. So the overall final score for the E.L.F Beauty is at 6.4. For the economic mode score, it's kind of like narrow to moderate, and overall classification is actually a very solid narrow mode, with also from the Guru Focus rate it as a mode of 5 at solid narrow. Morningstar does not assign a wide mode, II Invest, similar notes of lack of wide moat status, and Seeking Alpha argues that the business has a strong moat, citing its resilient model and execution. So based on the score, it's actually in a very moderate level, and just lack of structural defenses and regulatory barriers or entrenched ecosystem dynamics typical of wide moat incumbents. So the company just holds a 6.4 moat from current situations, and it's just not a very wide moat and not being seen as a wide moat by most of the analysis as well. Overall, for this company, would I actually wanted to buy? Because right now the situation is that the company is showing a decreasing form in terms of ROIC and ROE, lower than 15% for the ROIC, especially for ROIC, as well as the decreasing net income. But sort of like we can explain the net income is actually a very seasonal, especially a very spike value in terms of the results shown in every June of each year. But then from 2023, 2024, and 2025, the value from net income at June is actually decreasing, and showing that the company's margin of earning is also in the form of decreasing as well. So would I actually buy this? I would not consider this as in my investment portfolio because of its less or moderate moat. So it does not achieve the goal of mine to find a wide moat company. So definitely I would actually exit from the options. So I will actually exit from the options of buying this assessment tools. However, I still believe that this company has a lot of upsides in terms of increasing their economic scales as well as provide more products in the near future. I guess that is all for today's video. My conclusion is that this company is actually in a very solid form. It's not bad, it's not good also, but it's very stable with increasing revenue, net income sort of like increasing, but not, at least it's not in negative form, with free cash flow, low debts with reasonable high cash values. It's just that the mode is losing its possibility of being a strong company at 6.4. So it's not one company that we're likely to buy and hold long term in the long run. So if you are interested into looking deeper and in this company, you can actually do your due diligence before making your own decisions. And I guess that is all for today's video. If this helps you, hope this helps you, and if you want to support me, click the thumbs up, share the channels to the friends, as well as subscribe to my YouTube channel, and I'll see you guys on the next ones. So a pretty good company, but not in my radar, and I'll see you guys on the next one. Goodbye.